So in the video, I'm about to explain why I sold all my stocks, right? So me personally, I've been real heavy into option contracts lately. So basically, my portfolio, I typically like to have some cash on hand. I like to have buying power in my actual accounts, and I like to have a decent amount of asset value in actual stocks, right? Plus, you know what I'm saying? Like I said, I'm heavy on option contracts too. So with stocks, you always want to have some stocks because when the market is uptrending, that's your safest bet. So you ain't entering at no crazy prices or doing nothing crazy, right? And while it's uptrending, you still gaining value. So when crazy stuff like Fed meet is happening and the market start collapsing in a sense or correcting, I don't know what to call it right now because it ain't finished, you may lose 10% of value in your stocks, but your contract's going to get obliterated. Now your contracts, depending on what you done got, you done lost anywhere between like 40 to like 90% in value. Sometimes ain't no recovering from that. So me personally, I like to buy contracts that's dated further out. So whenever something unexpected like this happens, and I'll show you some stocks in a second, when unexpected stuff happens, I got a plan to at least attempt to rebound and regain my value and either exit my positions for maybe a 50% loss instead of like 100% loss, or I may average into that position if I feel like the trade is still strong and we just had some, a market. It's a market correction. Let's say it is a market correction, right? So let's look at XLF. This is the financial sector, an ETF, right? So you look at the past few months. We get into 2021 right here, right? And it starts to uptrend. So we got a pretty strong uptrend. It's bouncing off the 50-day moving average. Not barely ever really going below the 20-day moving average. The 20-day moving average is my red line. The 50 is the blue line, and then the 200 is the green line. So you have a strong, tight uptrend, right? So the Fed meeting happens, and me being me, I'm like, dang, this is at the 50-day moving average. I'm finna go in crazy, right? So I started buying contracts pretty heavy right here, but I bought a decent portion of contracts that was like between 1 and 3 months away. And I went heavier on some like regional banks, like 6 months away, like into 2022 and stuff, because how I interpreted the Fed meeting was you looking at the dot plot, and just common sense says that rates are going to be raised eventually, and bond tapering is going to begin. So banks make good money when rates start to go up. Their profit margin start to get better profit, right? So I gave it like a day or two, and then of course, literally rate went at the 50-day movement. I was like, dang, this is a good discount, so I'm about to go heavy, right? This ain't start collapsing. So now I'm sitting here like, what is going on, right? So my contracts got hit hard, but I went so far out. The ones I got in July, let's say we take a total loss on that. I didn't go too heavy on July. I got a little bit of July contracts and heavy on August, and then I went super heavy 2022. Right. So unless for some reason XLF decides to go into like a strong bear market and doesn't even attempt to recover, then I'll be okay. I can start. So now when something like that happens, you break a strong trend. The 50-day moving average is considered a strong area of support, right? So you break that, and now you start to say, dang, where we about to go? Is we going all the way down to the 200-day? And it might happen. I don't know what's going to happen. All you can do is watch the price action, see what it does, watch volume, all that stuff, right? So the Fibonacci retracement is something that I am not too accustomed to using, but I've read about it for months and months and months. I never had a reason to actually use it until now, because you break outside of, I talk about the Bollinger Bands pretty often. You kind of see them here. They kind of is all fuzzed up a little bit, right? You break outside that Bollinger Band, to me, that's a signal to start saying, okay, this is either a discount or this is about to collapse. You break outside the Bollinger Band, we ain't closed at these prices yet. So I'm saying to myself, this is a discount. again, the fact that we at the 50-day moving average slightly below, I'm like, this is a discount, right? You close below the bottom Bollinger Band, you start to say, okay, if we do not rebound tomorrow and close inside that bottom Bollinger Band, then we can start to assume that we can get a little bit of a downtrend. I don't know how bad it could be, right? So that's kind of the assumption going forward. So let's take these back off the screen. So now you start to say, okay, where are we going? The Fibonacci sequence, right? You go, it's basically telling you the 61.8% level is considered the golden area or something like that, they call it, right? So you would like to believe as an investor sitting here at that 61.8% level that you're going to start either consolidating or bouncing. That's not to say that you're going to just bounce and go recover all the losses, right, and be back at highs. I don't know if that's going to happen. You just kind of start to say, okay, this is an interesting price level to start entering. So if it breaks that 61.8% level, I'm just going to assume that we're probably going down to the 100% level, or we're going back to the 200-day moving average, wherever that is. So if we start breaking that 61.8% level, and this is not going to be super exact, so don't get too caught up in the exact price, because I drew the Fibonacci sequence based on what I perceive to be the extreme low and the extreme high. So, right, we're looking at that now, and we'll say, all right, so if we start breaking, now we got to start shorting. And me, I open up some weekly shorts because I have so much in like August call options, right? Because I don't know what's going to happen on Monday. So once Monday comes, I'll get a better sense of what direction we headed in. And we'll just go from there. The weekly puts that I got a very small amount because those things will jump in value like crazy. So my longer term call options, if we start to break this trend and we really in a strong downtrend, then I can exit those monthly call options for, say, like a 50% loss. But those weekly puts are going to jump crazy in value. They might like double or triple within a day, depending on how strong the price action is on Monday, right? So I don't know what's going to happen. I have not a clue what's going to happen because I didn't think it was going to break the 50 days. So, you know what I'm saying? Like, you only can play these trends and take them as they come, right? So in that case, we start breaking this level. Then I start entering stronger put positions, probably I say Wednesday or Thursday, because the banks do have stress test reports on like Thursday. I think it's June 24th, whatever day that is. So they do have a catalyst coming up that could push them into a reversal. But between Monday and that day, this thing could just keep falling. So I'm playing both sides because I feel like this is a discount, but I'm not the stock market. I gotta only take what the stock market is giving me, right? So let's look at another one that I was interested in. Caterpillar. So let's make these back this color, the Fibonacci sequence. So again, you take what I perceive to be the extreme low. You got a bunch of price action here. You see some declines here and there, right? But I would call this an extreme low, right? I would take that and take it to the extreme high. Now the Fibonacci sequence is going to draw itself. Look what happened when it got to the 61.8% level. Now this thing turned out to be true. I got some call options here, and I felt safer with this one because we are a lot closer to that 200-day moving average. So even if it decides to break down, I can get back into my monthly call options here, probably be at maybe a 50% loss, and I can average in much heavier because I didn't go too heavy here because this thing just been bleeding. So I start my position here, and I can recover, I can rebound. The 200-day moving average is right there. People, this is a blue chip stock. Another thing that I'm looking at also, I'm not just playing the Fibonacci sequence by itself. You never take any trend by itself, right? So I'm looking at the RSI. When the RSI gets below 30, that's considered oversold. Again, that's not to say that Caterpillar's RSI go below 30 and this thing's going to start rebounding and be back at highs next week or next month or whatever. It might take a few months. But during this time frame, when I see we at the 61.8% level and this RSI is signaling oversold because it's below 30, and I'll go full screen real quick. So you won't be able to see me, but you see that it's below 30. You see that. This I text my group and I told them, I was like, this is borderline disrespectful. Unless we're going into a recession, which we have people say that all this and that, and everybody's short in the market, blah, blah, recession. People been saying that for like, I don't know how many years, whatever, right? You can't assume we're going into a recession until we enter a recession. Like, you cannot just assume that, because every day of the week, you can think of a reason why we're going into a recession. If we're in a bull market, we're in an uptrend, you're going to have corrections every now and again. I don't know if this is true, but I think I heard somewhere that there's one market correction every year or something like that, but I never verified this. But market corrections happen. It's whatever. Like, you don't get stressed out about it. You just play the trends. If we go into recession, now we start shorting. I'm only buying weekly shorts because I don't know what's going to happen next week. I would love to believe that this is going to play out and start to bounce, day by day. But I don't know that. This is a blue chip stock. Like I said, this is a great company. Like, people, look at the massive run up Caterpillar had the past few months. I mean, this thing just been going crazy. So people missed out on this trend, and every month they're gonna say, this too high to buy, this too high to buy, this too high to buy. I feel like it's overvalued. I'm seeing this RSI this high, this is overvalued, this is overvalued. You start to get a pullback. Them same investors that was missing out is starting to probably say, yeah, I like this. Like, I like this. And like I told my group, I told them to be straight up. I was like, look, man, it's probably some hedge fund managers having a you-know-what right now, seeing Caterpillar at prices like this, closer to 200 a day, and this type of market with all this type of money. I just cannot personally believe that it's going to go too far below the 20-day moving average, or we going into some type of crazy recession. Now, again, that's just my personal belief. But if the market starts saying we're going into a recession, then I'm starting to short everything. So that's just how I've been playing it. I'm just going with the 61.8% Fibonacci. People say that they like to use the 50, so I'm just kind of using the Fibonacci sequence with RSI. I've been learning about, let's look at the stochastic, right? I'm learning about that, all that kind of stuff. So it's a bunch of different things that I've been learning about lately, starting to kind of pull out, right? Just so I can have more technical reasons to back my thinking, because again, like I said, I never thought we'd be at these prices anyway, but the fact that we is, that goes back to why I'm selling my stocks, because my stocks lost like 5-10% of value. Well, my portfolio, I think, lost like 5% of value or something like that. But I take that money and I just start doubling up at these prices. I'm going to literally make what's in that portfolio within a day, a week, a month, depending on how slow I want to take it. Because if the market is not sending me strong signals, then I'm not going in super heavy. I always want to have some type of money invested, but I never go in too heavy or all at once unless we just got some super crazy long-term good news, which I doubt is coming out, but I don't know. Another one I'll tell you that I'm interested in is Maztec. Man, this is probably my favorite stock. Let's get these other indicators back off the screen, right? So let's take this off so we can see the full screen. But before we take the RSI off, just look, it's below 30. These RSIs don't get this low too often. So the RSI, again, is below 30 is a sign that it's oversold. And it's not to say that it's going to rebound and start shooting back up the highs tomorrow. Just mean that you probably can expect a little bit of price action upwards unless we go into some type of strong bear market, right? Let's look. Yo, when the guy in my group, OG, he told me about Maztec, told me what they do and all this stuff. I was like, man, that sounds crazy. This old slow moving stock, I can't really put no money in that. But he telling me about contracts. So up in this time frame, we learning heavy about contracts, right? So Maztec, I told myself, like, look, I ain't finna, you know what I'm saying, I don't know to buy right here because I ain't really trusting the 20-day like that. Because at this time, I'm like, sure, I'm trying to put everything there. So, boy, that Jane started declining. And I put a lot of money in, right? And I remember this thing bounced off, touched the 50-day. I put a crazy amount of money in. The next day, man, I had a whole bunch of stuff just doubling profit. And I sold it so fast. Then this ain't started bouncing. So that was like a monthly contract that I had. Or maybe, I think it was actually a July contract that I got. But then I had some Octobers that I was just sitting on. And I was scared. Because at this point, I'm like, yo, these contracts making so much money. I don't know what's going on. So we get up here to what I deem to be resistance. Boy, I sold everything. Once it started going sideways, I sold everything. But I say that because I took that as a lesson, because if I would have just held them contracts, and we can always play the what if game, but you can only go off the trends. I say that because what I should have done was trimmed heavy and waited to see if it would break out. It did break out. I could have re-entered, but I kept telling myself, and I was in Florida at this time too. And I remember we were talking about it because we were like, man, it ain't gonna break 100. It ain't gonna break $100, because we deemed $100 to be like the resistance area, right? So it broke out, and I kept telling my group, like, look, man, I'm down here in Florida. I think they corporate down here. I'm finna go pull up on them right now because they not breaking out. Man, they broke out, went crazy. I would have made a ridiculous amount of money had I just kept my contract. But you get scared, man. Contract values start fluctuating crazy when stocks just bouncing up and down. Like I said, you can lose I lost like 50% of value in a bunch of stuff, XLF, that I had bought on that day was sitting at the 50-day moving average. So I mean, I had too much profit to be sitting right here playing. I think that was like what? I can't remember, like 10, 15, or 20,000 in profit. I was like, bro, I'm not finna play with it. And actually, let's look at another another example, right? Because this can be scary when stuff start to pull back. It can be real scary. Look at this pullback. It's pretty sick, right? This is literally right when I was getting my very first contracts. Well, I was buying them in late 2021, but I was all in technology and stuff at the time. Then I learned about rates and bond yields, all this stuff. So now I'm like, all right, cool, value, blah, blah, whatever, right? So I get in on JP Morgan. I'm like, shoot, I don't even know no JP Morgan bank at. That's where all the money at. That's what I'm telling myself in my head. So I'm like, shoot, this is a good bank. I'm looking at XLF. This is one of the top holdings of XLF. Like I said, XLF is the banking ETF, right? So I'm like, shoot, I'm going to get me some JP Morgan. Boy, it was January. It might have been February. It was super late January or very early February, right? So I'm buying contracts that expire in February because I don't know no better. Man, these things started pulling back. I literally still remember to this day, we got to this point. I was like, bro, I don't even know what's going on. I only put in like a little teeny bit of money. I was just trying to see what's going on, right? My contracts was at a 90% loss. JP Morgan bounced off the 50-day and started to take off. Man, I recovered all that money. I didn't average in. I didn't do nothing. I was just sitting, watching, learning how the value of contracts can move. And at that point, I was like, yo, this is crazy. So that's when I got like real heavy into contracts, because you definitely lose a lot of money. And that's why I say practice risk management and do not never just dump everything into a stock, because I ain't no perfect like investor. Like we just saw with XLF, I put a lot in and that thing started just declining. But JP Morgan and XLF is other examples of people getting scared. But you gotta, as an investor, you gotta start being greedy when people getting scared, but still practice risk management. Because just imagine if I would have held my JP Morgan. It's like I knew what was going on, but I was just kind of nervous. Imagine if I went long on JP Morgan right here. I bring Nucor up all the time. Nucor did me dirty. Nucor straight disrespected me. I caught a straight snipe. I remember calling out Nucor when it was at the 50-day, right? Back in early 2021. I didn't actually buy any at this time, right? I was just like, yo, this ain't got the 50-day moving average. We should probably watch it. People talking about inflation. I'm like, yo, still gonna go crazy. Man, Nucor hit the 200-day. I sniped them right here. They get up here. I said, man, I done made enough money. I got to sell this. I think I had some contracts, some January 2022 contracts. Or maybe it was, I think it was October and January 2022 contracts that I was buying for like $200, but they jumped to like $700 and $900. Well, I sold them so fast. Because again, I'm just starting. I'm like, yo, ain't no way this should be making this much money. Let's look at, I do this all the time because it's really sick. It's just a reminder. Again, you get to resistance. As long as the trade is still good, you just need to trim. You only trim it to practice risk management because it could still get rejected. You just want to lock in your profit, but you still want to be in the trade. So I should not have fully exited. But like I said, I didn't know that stuff at that time because, you know what I'm saying? I just wasn't really, I was brand new to investing. So I did what I thought was right and just live with it. And of course, my phone ain't working right, but Nucor, I'm trying to pull up my actual account while I'm on this screen recording thing in Webull. But those Nucor contracts, last time I looked, was probably somewhere up in here. There was almost like $4,000. So something I bought for $200 was $4,000. And I'm going to tell you right now, I would not have held all of that stuff up here. So I don't even get stressed out about it because even what I would have held right here would have definitely, absolutely got sold right here because I'm like, ain't no way. Because at this point, it'd been like $2,000, $3,000. So that's like a ridiculous amount of profit. So at some point, you got to exit the trade. And I was buying shares anyway. And that's how you do it. You make crazy profit in the contracts. And then you just continually load up in the shares so that you're still involved in the trade. And you just ride the shares all the way up. So I'm actually shorting Nucor right now because it closed below the 50-day moving average. And it's probably, it's got to test some of these Fibonacci levels, right? And looking at the RSI, I believe we do not have any oversold indication yet. So yeah, we do not have any oversold indication yet. So that's why I'm shorting Nucor down to some level or whenever I feel like the trade is profitable or whatever. So, or good enough profit. So that's pretty much what I got going on right now. And I don't know if I said this, but I do got some weekly puts on CAT just in case it does decide it wants to test that 200-day moving average or break the 61.8 Fibonacci. I got them weekly puts because if it does break, I'm definitely going to be buying at the 200-day moving average. So I'm not going to want to exit my calls because I'm just going to be rebuying them. But I'll take that profit from the puts and just use it to average into my calls. So now it's not even me that's all invested in those calls. It's some profit from some puts. So I don't know what the term for that is called, but I keep saying I'm squeezing profit out of these trades. I don't know what that's supposed to mean, but we'll roll with that. And like I said, I'm with that until I got some type of verification that we are going into some bear market or recession or whatever. So I'm not really scared of that right now, and hopefully it don't come back to bite me. But like I said, I just practice risk management. I don't go all in on any trade. I keep a good amount of buying power. I keep cash reserves, all that stuff. So I exit trades when I feel like they dead instead of just eating them all the way down to like 100% loss. My July XLF contracts that I got are at like a 70% loss right now. But again, this happened so fast with XLF. I literally didn't even know what was going on because I was working and I was just kind of confused and all that stuff. So then we opened super low. So it was really nothing I could do at that point. And like I said, now I'm at the point where I would consider buying. So I would ride those contracts up or just eat a full loss if it decides to open super low or something. So I would just ride those contracts up. I wouldn't expect to get a full break even on those, maybe down to like a 30% loss, ride them from a 70% loss to like a 30% loss and just take that, because it's not that it was a bad trade. It's just that I wasn't available to get out of the trade when I was probably at like a 25% loss. And again, that's why I'm buying monthlies. I'm not doing weeklies no more unless I'm like squeezing it or whatever that term is called. And XLF is also oversold. So, RSI is below 30. So we rocking with that, man. That's how we rocking for a little while. All that good stuff. So I hope y'all enjoyed this video. Hope you learned something. And absolutely, absolutely do not take this as financial advice, because this is a lot going on. You do as you please. You see the trends that I'm talking about. You research it on your own. I got a public playlist that I continually add to every time I find a good video explaining these trends that I'm learning. So just refer, and I put that down in the description, the link to that playlist, right? Well, I guess you can find it looking at the page, but I'll still put it in the description just so you can see it. So that playlist is literally from start to finish, every single thing that I've ever learned from other YouTubers or content that I put out. And it's talking about how to buy contracts in Robinhood, Webull, TD Ameritrade. It's talking about what an option contract is, what a call option is, what a put option is. It's talking about what at the money is, in the money, out of the money, all that stuff. It's talking a little bit about the Greeks, just explaining how time will soak up a lot of value out of your contracts if you sit there and just let it sit. I mean, it doesn't matter what the stock start doing. If you don't have any time, you ain't getting nothing out of it, right? So it's talking about a whole bunch of stuff. It's talking about bond yields, what that's doing to the market. It's talking about like Fed updates. It's talking about other YouTubers who saying different ideas, just so I make sure that I'm not this soul, just so it's just not me coming up with this stuff. Like, I listen to a bunch of different people. I listen to people who, like, Meet Kevin. He been super into tech. He's not like into this value stuff at all. So I make sure I listen to him all the time. And when he's saying stuff like, yeah, tech is about to get beat up, blah, blah, and I'm starting to say, all right, cool. So I see him saying that. I listen to Jim Cramer a little bit on Mad Money. So Jim Cramer saying the same thing. I listen to Jazz Wealth Financials. If he's saying it, and I'm like, all right, cool. These is three totally different people who thinking the same thing I'm thinking. So unless we all tripping in the market, just do something crazy, then it's probably a good trade. So I back that up with my technical trends and just decide when I want to enter or exit. So that's how I play it. Me and the guys, we come up with our own ideas too. So like, I don't think anybody actually told me to look at like Caterpillar or nothing like that, but it was obvious, like, industrials been getting brutalized. So we kind of knew to expect it, but I did not think we would start breaking trends. But I just listened to a bunch of different YouTubers, man, and just roll with it like that and just do whatever I need to do, because like, Aristotle too. He big on Instagram. I think he been getting more active on his YouTube lately. So go follow these people on social media, or follow their YouTube or whatever. Subscribe to their channels. Man, you'll learn a whole lot. So that's really all it is to it, man. And I hope you learned something from this video. And like I said, do not take none of this as financial advice, because you decide what you want to do. If you like what I'm saying, then just follow that playlist and learn it all on your own, or hit me up. I'm on Instagram at 6fatdaddy9. You follow the page. I don't make a lot of YouTube videos because I'd be mad busy, but roll with it like that. Let's get some money, man. All right, peace out.